US tariffs shake European car industry. British steel faces massive job cuts. Major shake-up in the global auto industry and UK manufacturing sector to dust. This week, the announcement of new US tariffs on car imports sent shockwaves through global markets, pushing automotive shares sharply downward. At the same time, British Steel announced the closure of 2 major blast furnaces, threatening thousands of jobs and effectively ending more than 160 years of steelmaking history in Scunthorpe. But what triggered these events? How will they affect carmakers, the steel industry, and everyday workers in Europe and the UK? Let's break it all down. US tariffs on auto imports. What happened? Earlier this week, former President Donald Trump announced a 25% tariff on imported vehicles, aimed at protecting US automakers and reviving domestic production. The policy is a direct response to what Trump's administration sees as an unfair trade advantage enjoyed by European and Asian car manufacturers. The impact was immediate. Shares of Volkswagen, BMW, Mercedes-Benz, and Stellantis fell sharply. General Motors and Ford, based in the US, also saw declines due to fears of retaliatory tariffs and global demand disruption. In London, the FTSE 100 dropped, with auto-related stocks leading the downturn. This policy announcement has raised the possibility of a renewed global trade war, especially in the auto sector. How big is this for the global auto market? The European Union exports over 1 million vehicles per year to the US, making it one of the largest cross-continental auto relationships in the world. With a 25% tariff now added to the cost of selling these cars in the US, many automakers will either have to raise prices, making European cars less competitive in the US market, or absorb the cost, which will squeeze profit margins dramatically. For companies like Volkswagen and BMW, the US market accounts for a significant chunk of their global revenue. In short, this tariff could lead to price hikes, production cuts, or even plant shutdowns. What about the UK's response? In contrast to the EU's more aggressive trade posture, Chancellor Rachel Reeves has stated that the UK does not plan retaliatory tariffs, at least not yet. Instead, the UK is hoping to improve trade terms with the US through negotiation rather than escalation. But that doesn't mean British businesses aren't feeling the impact. Many UK auto parts suppliers are deeply integrated into European manufacturing chains, and disruptions to exports to the US will reverberate across the supply chain. British Steel's shocking closure announcement. While the automotive world was absorbing the tariff news, the UK steel sector was hit with another devastating blow. British Steel announced that it will shut down its 2 blast furnaces in Scunthorpe, putting up to 2,700 jobs at risk. This move effectively ends more than a century and a half of steel making in the town. Why the closures? The company cited high energy costs, weak global demand, pressure to reduce carbon emissions, and the need to cut long-term losses. British Steel will reportedly shift toward electric arc furnace production, which is greener but also less labor-intensive, requiring far fewer workers. The bigger picture is UK manufacturing in decline. The simultaneous impact of US tariffs on exports and domestic steel plant closures paints a worrying picture for the UK's industrial base. The UK government has pledged hundreds of millions in support for green steel production, but the transition is proving painful. Key concerns include job losses in key industrial regions, long-term decline in heavy industry, reliance on imported steel and parts, raising security concerns. Analysts warn that unless comprehensive industrial strategy is implemented soon, the UK could lose its remaining manufacturing edge. How are markets reacting? On the stock side, 1. Major car makers in Europe and Asia saw losses across the board. UK-listed steel and construction stocks also took a hit. The pound remained stable, but investor confidence showed signs of weakness. Analysts expect continued volatility in auto sector earnings forecasts, commodity prices, especially steel, trade-related equities. What does this mean for workers and investors? If you're in the automotive supply chain, this news could signal job restructuring or even layoffs, especially if tariffs reduce demand. For steel workers in Scunthorpe, the situation is even more dire. Many may face permanent displacement unless government retraining programs are introduced quickly. Investors should watch for corporate responses from BMW, VW and Stellantis, possible EU retaliation, whether the US follows through with further tariffs in other sectors. Final thoughts: is this the start of a new trade war? The announcement of 25% US tariffs on vehicles is a dramatic move that could redefine the global auto industry. At the same time, the UK steel industry is shrinking fast, with deep impacts on jobs and industrial output. These two events may not be directly related, but they signal a broader theme. Global trade is shifting, and so is industrial strategy. So, what do you think? Will these tariffs protect US jobs, or just trigger another global trade conflict? And is the UK doing enough to protect its industrial workforce? Drop your thoughts in the comments below. Like, subscribe, and hit the bell to stay ahead on the latest in global finance and market shifts. Stay informed, stay ahead, and stay prepared for what's next.